While most entrepreneurs struggle to raise even $1 million, 73% of all venture capital funding in 2025 went to just 2 companies. OpenAI grabbed $40 billion, and Meta threw $14.3 billion at Scale AI. This isn't just a funding story, it's the moment venture capital broke, and if you're building a startup, everything just changed. By the end of this video, you'll understand exactly what this mega funding concentration means for your business, and the 3 strategies successful entrepreneurs are using to thrive in this new reality. Here's the brutal truth. OpenAI's $40 billion round is the largest private funding deal in history, nearly 3 times bigger than any previous raise. But here's what should terrify every entrepreneur. This represents a fundamental shift where venture capital is becoming a winner-take-all game. The data is shocking. OpenAI now serves 500 million weekly users and expects revenue to triple to $12.7 billion by the end of this year. Meanwhile, Scale AI jumped from $870 million to a projected $2 billion in revenue, a 130% year-over-year increase. But what does this mean for the 99% of startups that aren't AI mega unicorns? According to Image Capitalist's latest analysis, AI firms are now attracting 71% of all venture capital, up from just 14% in 2020. This isn't just a trend, it's a complete restructuring of how capital flows in the startup ecosystem. I've been analyzing Fortune 500 strategies and startup funding patterns for years, and I've never seen concentration this extreme. If you're getting value from these insider funding insights, hit that subscribe button now. We break down the executive strategies that actually work every single week. In the next few minutes, I'm going to show you 3 strategies that smart entrepreneurs are using to not just survive but thrive in this new mega funding reality. First, understand why these mega rounds happened and position yourself accordingly. OpenAI's $40 billion isn't just funding. It's a $18 billion investment in the Stargate infrastructure project, building a network of AI data centers across the US. Here's what successful entrepreneurs understand. These aren't traditional startups anymore. They're infrastructure companies building the digital equivalent of railroads or electricity grids. Your implementation strategy: instead of competing directly with AI giants, become their picks and shovels. Scale AI built its $29 billion valuation by becoming what industry insiders call a data foundry. The place where raw information gets refined into high-quality datasets that power AI models. Specific action steps: identify infrastructure gaps in AI deployment, data management, security, compliance. Build tools that help companies implement AI rather than creating AI itself. Target the 99% of companies that need AI infrastructure but can't build it. The numbers prove this works. Scale AI's revenue jumped from $250 million in 2022 to $870 million in 2024 by being the infrastructure layer, not the AI itself. While everyone chases general AI, smart entrepreneurs are going deep into specific verticals. Scale AI's success came from specializing in data labeling for specific industries, from autonomous vehicles to defense contracts, including a recent $99 million US Army contract. Here's the counterintuitive truth. The bigger the AI giants get, the more opportunities they create for specialized players. Quick question: which of these strategies resonates most with your current challenges? Drop it in the comments below, and if this is helping your entrepreneurial thinking, smash that like button. Your specialization playbook: pick one industry where you have deep expertise. Identify AI implementation challenges specific to that sector. Build solutions that require industry knowledge, not just technical skills. Focus on compliance, regulation, and industry-specific needs. Real example: while OpenAI builds general AI, companies like Scale AI are securing multi-million-dollar defense contracts because they understand government compliance requirements. The most advanced strategy: instead of competing with mega-funded AI companies, become their essential partner. Meta invested $14.3 billion in Scale AI specifically because Scale CEO Alexander Wang understood that partnership, not competition, was the path to massive success. Here's what most entrepreneurs miss. After Meta's investment, OpenAI and Google stopped working with Scale AI, but this created opportunities for new players like Micro One, which grew from $7 million to $50 million AR in just 1 year. Forward-thinking leaders continue to join our community for weekly strategies just like this. If you want to think and act like a Fortune 500 executive, subscribe and hit that notification bell. Your partnership strategy: identify gaps created by mega-funded companies. Build complementary, not competitive solutions. Focus on markets too small for giants but valuable for focused players. Create vendor relationships with multiple AI leaders to reduce dependency risk. Here's your step-by-step action plan to thrive in the mega funding era. Week 1, 2, market analysis. Map the infrastructure gaps in your target industry. Identify which AI giants are active in your space. Research their partner ecosystems and vendor requirements. Week 3, 4, positioning strategy. Choose your specialization: infrastructure, vertical, or partnership. Validate demand through customer interviews. Begin building MVP focused on one specific pain point. Month 2. 3. Execution launch with clear positioning as AI enabler, not AI competitor. Target pilot customers who need AI implementation. Help build case studies showing measurable ROI. Remember, 71% of venture capital is going to AI. But that means massive opportunity for the companies that help everyone else implement and benefit from AI. Share your implementation progress in the comments. Our community of entrepreneurs supports each other's growth. Before you start implementing these strategies, help other entrepreneurs discover this content. The mega funding era is reshaping everything about how startups get built and funded. Hit like if this gave you a new perspective on the venture capital landscape, subscribe for more insider strategies that actually work, and share this with any entrepreneur who needs to understand how the funding game just changed. Which strategy will you implement first? The infrastructure play, specialization advantage, or partnership ecosystem? Let me know in the comments. Join our community of forward-thinking entrepreneurs who refuse to be intimidated by mega rounds and instead see them as opportunities to build smarter, more focused businesses. The mega funding era isn't the end of entrepreneurship. It's the beginning of smarter, more strategic startup building. Your competitive advantage starts here. This is the C-Suite playbook, where Fortune 500 strategies meet actionable insights. Your competitive advantage starts here.